You sign the last page. 300,000 lands in your account. Somewhere, a vault got lighter. Someone's savings became your house. Here's the thing nobody tells you. No vault open. Nobody's savings moved. The bank typed the money into existence while you sign. By the end of this, you will see exactly where every dollar came from and why the bank needs you more than you need the bank. Start with what school taught you. Deposits come in. The bank keeps a slice and lends the rest. The money multiplies down a chain. It is a tidy story, and the people who make the money say out loud it is wrong. In 2014, the Bank of England published a paper on how money gets made. Their words, the majority of money in the modern economy is created by commercial banks making loans. Read the order of it. The loan comes first. The deposit is what the loan creates. Your mortgage did not move money across a building. It made money on a screen. Run the math on the slice the bank keeps. In March of 2020, the Federal Reserve set the reserve requirement to zero. Not lowered, zero. The fraction and fractional reserve is gone in America, and almost nobody noticed because it was never the thing holding the roof up. So what stops a bank from typing an infinite number? 3 things hold the line, and none of them is a vault. First, you have to pay it back. A loan is an asset only while it performs. Second, the moment the money exists, you spend it, and it walks out the door to another bank. Your bank settles the difference in reserves. It does not create itself. Third, regulators cap how much a bank lends against its own capital. The owner's money at risk, first in line to burn. Money made by keystroke leaves by keystroke. In March of 2023, depositors tried to pull $42 billion out of Silicon Valley Bank in one day. By closing time, the bank was short by almost $1 billion. It held long-dated bonds. It did not hold the cash. A bank is not a warehouse for your savings. It is a promise, and promise is now clear at the speed of a phone. Here is the part worth sitting with. The bank made your $300,000 with a keystroke. You repay it with 30 years of real work, real hours, real risk, a real roof over real children. One side of the trade is typed. The other side is lived. This is not a scandal. It is the deal, and it has built more houses than any vault ever did. But you should know which side you signed. So where did your $300,000 come from? Your signature. The bank did not hand you somebody's savings. It took your promise to pay, wrote a matching promise of its own, and the 2 promises bought a house. Make the final payment, and the money does not return to a vault. It vanishes. Loans create money. Repayment destroys it. The Bank of England says so in the same paper, which is why the wealthy stopped asking how much a bank will lend them. They ask a different question. How good is my promise, and what will it build? The vault behind the counter was always a stage set. You walked in believing you were there to borrow someone else's money, and walked out having made money nobody had, out of nothing but your name and 30 years of your life.